Hi, this is P.R. Sundar and welcome to this special episode where I am going to talk about two sensitive issues. And number one, this is the talk of the town now, and 50% cash component. And let me tell you what is the actual rule. The actual rule is that 50% cash component rule is applied only at the broker level, not at the client level. Just to give an example, if I am a broker, if I have a 20 clients, if 10 clients give collateral and 10 clients give cash, assume that everybody gives same amount, let us say 1 lakh. So 10 people give each 1 lakh cash, 10 people give each 1 lakh collateral, the total is 20 lakh rupees, and out of the total 20 lakh, which I am going to pass it on to the exchange, and 10 is collateral and 10 is cash component. That means as a broker, I am satisfying that rule. The 50% cash component, minimum and maximum 50% collateral component, that is only applied at the broker level. There were a lot of news articles in newspapers, saying that, segregation and monitoring of collateral at client level by SEBI. So somebody said, that is coming with effect from December. Then they said that it has been postponed until February 28. Again, they said that it has been postponed to end of April. So from May month it is coming. And there are many brokers are telling the clients. I can tell you categorically that is wrong. The SEBI has not stated anywhere that a client has to bring minimum 50% cash component. I am just going to show you the circular which the people are talking, and all those who are talking about this, you can look at this. This is the SEBI website. This is a circular which is dated 20th July 2021. You can see segregation and monitoring of collateral at client level. What I click this circular that has come here. So this is that circular, segregation and monitoring of collateral at the client level. Now it discusses many things, so we do not need to see all those things. I straight away take you to the point number 18. Clearing members are required to maintain at least 50% of the total collateral in the form of cash or cash equivalent. At individual client level, a client may have allocation of cash equivalent less than the value of non-cash collateral provided by the client. In other words, minimum 50% cash equivalent collateral requirement may not be applied at the client level. This is the SEBI circular and the people talking about, and I have shown you the SEBI circular. I have shown you the point number 18, and that says very, very clearly it will be applied only at the broker level, not at the client level. I spoke to some of the brokers quoting the circular. They said that, sir, we had a meeting with exchange. We had a meeting with SEBI, and what they told us, they are saying yes, it is not applied at the client level. The client can give 100% collateral, no problem. But you have to pay the penalty to the exchange. And how can SEBI or NSE tell, client can bring collateral and then broker pay the penalty? The penalty amounts to 1% every day. For 250 trading session, 250% penalty, who will pay? The brokers are getting a little money only. I am still very confused, but this circular states very, very clearly that the cash component, minimum 50% cash component, is not applied at the client level. It is applied only at the broker level or clearing member level. So this is one thing. Second big topic nowadays, this peak margin penalty, margin shortfall. There are many brokers, they just keep on deducting money from the client's ledger by saying this is a peak margin penalty, margin shortfall, and this and that. And I'm going to show you what has happened between me and one of my friends, okay? And one of my friends has actually filed a case with SEBI when one of his brokers charged the peak margin penalty. And here you can see whatever that we discussed. NSE frequently asked questions where point 15 allows passing the penalty to the client. However, with a lot or conditions and they need to prove the evidences and send the statement by end of the day. There is a clear line that says member cannot pass on the penalty with respect to short collection of upfront margin to the client. So it is only the end of the day margin shortfall that can be penalized. My friend in SEBI told this: clearing member or trading member cannot levy penalty on clients, but they can ask client to deposit the shortfall. If not deposited, they can directly square up the position. They can only square up the position if intraday shortfall. They cannot charge penalty. Circular point number 5 and annexer 4. Yes, attached all those circulars. I got an official confirmation from SEBI that it has not given any circular which allows broker to levy penalty on the clients. And yes, in that circular also. So this is that circular. Just for security reason, we are blurring the person's name. Initially, he filed a case with SEBI. The SEBI has not responded. Then he filed Right to Information Act. Here you can say compliance of appellate authority order dated December 14, 2021. This as a reference to your application dated September 29 in terms of RTA Act and in compliance with the AAO dated December 14, 21. Our reply is under. Reply to query 1. No such circular has been issued by SEBI which allows clearing member or trading member or stockbroker to levy penalty on their clients with respect to of collection of margin. The SEBI replied to one of my friends stating that there is no circular issued to brokers for collection of margin penalty. And however, when I check with the brokers, so they tell me a different story. And they say that, some brokers, they told me, yes sir, it is true. We are not supposed to charge penalty from the clients, but is it fair that exchange is asking us to pay the penalty? Say for example, a client has a hedged position and the client by mistake, hedged position means, let us say somebody is selling call option 17,000 by 17,200 call option. So there will be a margin benefit. By mistake, if the client square up the 17,200 call option, then the 17,000 call option become a naked call option, the margin increases. So because of that, there may be a margin shortfall in his account. So is it fair that we pay the penalty? Then I asked the broker, did you ask the same question to NSE? Did you ask the same question to SEBI? They said, yes sir, they have asked, but they have not responded. The point here now, it's very, very clear that there is no such thing called peak margin penalty. There is no such thing called intraday short margin penalty. And there will be only EOD penalty. That too, the broker has to give a time for the client to top up by the next day morning. And if the client top ups by next day morning, there should not be penalty. This margin penalty has become a very, very big headache for all the option sellers. And this is what, as per my understanding, goes. And however, I do understand the problems of the brokers also. And one broker told me, sir, hedged position not squared off properly, the client get margin shortfall and then we pay the penalty. And in another case, the client bought an option and he paid the full margin for buying of option. And unfortunately, on the last day that has gone into physical delivery. And because the client did not have the full margin for physical delivery, again the broker was asked to pay the penalty. And in turn, what the brokers do, charge the penalty from the clients. So you can see what my friend says. SEBI has ruled that passing on short penalty on clients is not allowed as a procedural routine unless the broker takes the requisite measures to recover the margin shortfall from the client. In specific, please see point number 7 on the page 14 of this order, where they say such an act is not in compliance of the said SEBI circular in its true spirit, which means that SEBI is very, very clear that there is no intraday short margin penalty, there should not be any peak margin penalty, and the end of the day margin shortfall penalty can be applied to the clients provided broker takes enough measure to collect the margin from the client. So which means that there must be some adequate time given. Earlier, I remember the brokers will have about 5 trading sessions to report the margin shortfall. I'm just giving an example. Let us say on day one, there is a end of the margin shortfall, okay, and that report they have to give it to the exchange only on 5th of that month. So if the client pays that shortfall on 2nd or 3rd, okay, so as long as the money is credited into the broker's account, and then on 5th of that month, they can always choose not to report to the exchange. There are many brokers who are using this to their advantage, and they keep charging margin shortfall penalty left, right and center. And this is becoming a big issue. I repeat once again, let us say you look at what my friend says, my broker has refunded most of the penalty they charged on me. The broker actually charged the penalty for my friend, and after he threatened complaining to SEBI, and he says that he has got most of the money back. Then how broker can give the money back? He says all these are in public domain. And as per NSE circular, my broker agreed that penalty and upfront margin shortfall cannot be passed on as it is a broker's responsibility. That is why they refunded. Just to conclude this video, two things. Number one, as per my understanding, there is no 50% cash component minimum rule for the clients. And of course, brokers are telling the different story, but I do not know, because I can say what I can see in the circular, and I cannot comment on what, they say, exchange told them, but exchange has not given us any circular. SEBI can say anything, but SEBI has not given us the circular. We go only by the circulars. Number one, 50% minimum cash component is not applied at the client level. That's number one. Number two, there is no such thing called peak margin penalty. If suppose the margin shortfall comes, the broker has to tell you immediately, you have to square off the position immediately. They are not supposed to charge margin penalty. There is no such thing called peak margin penalty. There is no such thing called intraday margin penalty. There is only end of the day margin penalty. That too, the broker has to make an effort to collect the margin from the clients in order for the client to avoid the margin penalty. This is going to be a controversial video, but if you have any different comments, you can always comment in the comment section. But this is my understanding as of now. Hope you enjoyed watching the video. Thank you for watching.